Over the past 3 weeks, Bitcoin has tried to reverse its short-term downtrend several times. The first time, on August 29th, we got a big volume rally that put the price of Bitcoin back above its 10 and 20-day moving average, but 2 days later, the breakout failed and we slipped back to the bottom of the range. And then the second time, we got a rally attempt that put it back above its 10 and 20-day moving averages only for one day, and we failed again. Now we're working on the third time with a rally attempt above the 10-day MA and a probe above the 20-day MA that didn't hold. And Bitcoin is currently stuck between its 10 and 20-day MA. Will the third time be a charm? Will the breakout stick this time? This time may be different. Stick around in our video and we'll tell you why. Before we dive in, don't forget to hit the like button and subscribe to make sure you don't miss out on any future videos. And remember, as always, nothing we say in our videos is financial advice. This is simply our interpretation of what the charts say. So let's see what the charts say. All right, first, let's take a look at Bitcoin's recent failed breakouts and how they may be playing out and affecting the market action now. So on August 17th, we had this big sell-off, a huge volume drop that really blasted the market. And 2 weeks later, when we had this first rally attempt on August 29th, it was a big move. A lot of that was probably a short squeeze, people that were on the short side that needed to cover their positions. And when we got this big rally above the 20-day moving average, it got everybody excited. But the problem is that when you get a big sell-off like this a few weeks before, that creates overhead supply. That means that people who bought at higher prices, such as this previous consolidation, are now trapped at higher prices. So as the market rallies, all those people are selling just to try to get back to break even or close to it. And that creates overhead supply, also known as resistance. And that's what made it so difficult for this initial rally attempt to stick. And as a result, just 2 days later, Bitcoin had completely undone its gains. Now, that's called a failed breakout. And a failed breakout kind of compounds the problem because all the people that are stuck from higher prices back here, now you've got more people that are stuck that bought this rally attempt, and that creates additional overhead supply. So the next time we rally, we've now got more supply to overcome. So as a result, on this second rally attempt that we got, that's why we only got 1 day of a rally there, and then we sold off the next day. No follow through after getting above its 10 and 20-day MA for 1 day. Now, you can take a shot at these rally attempts in case they do stick, but it's important to have tight stops so that you're out right away if they don't. So when we had the second failed breakout attempt on September 7th, that again created more overhead supply from people that bought this. So now going into this third attempt, we've got a lot of overhead supply from people that got trapped at higher prices. But this time is different because this time when we got a sell-off prior to the current rally attempt, and that sell-off is notable because it undercut the lows of August 17th. You may recall in our last video, after we had this second rally attempt, we said that if the low of this day failed to hold, if Bitcoin got back down to the low of this day, that we'd likely see a retest and perhaps a break of the lows of this month-long consolidation. And that's exactly what happened. 3 days after this failed breakout attempt, the second failed breakout attempt, we got an undercut. On September 11th, we got an undercut of that August 17th low. And when you get an undercut, that's actually bullish because an undercut means that you've got lots of stops that are run below an obvious trigger point, and that attracts a lot of the buyers who've been waiting for a very low risk entry point. So you often get these undercuts below obvious support levels, and it's only an undercut if it gets back above that support level within the next day or so, and it did. We actually got the rally the next day, and most importantly, this rally was on higher volume. Notice how volume surged higher. It was a higher volume move, and this time, although yesterday we didn't hold above the 20-day MA, we are holding above the 10-day MA this time, and it's consolidating currently near the highs of today. So if we get back above this 20-day MA, this 26,050 area, and can hold, then that could lead to a tradable short-term bounce in Bitcoin. Next stop would be resistance of the declining 50-day MA right around the 27,500 mark. So we want to keep an eye on that level. That could be a notable resistance level as well. We've also got a trend line that we can draw from the highs here and connecting with the anchor point here in early August. And you'll see that that's just above the 50-day MA. So if we do get a rally to 50, we've got the downtrend line above there. Now, we took a shot with entering Bitcoin yesterday on the Morpheus crypto portfolio. And the reason was because it is undercut. We like this undercut, which increases the odds that the rally will stick this time because we've run all the stops below this, and that absorbs supply of all the people that were holding in these levels. So there should be less overhead supply now to absorb. But the question is, will the bulls step in and give any follow through momentum? If we get a rally up to this 50-day MA and downtrend lines start to stall, we'll look to take our profits and lock it in quickly. But with getting an entry just above the 10-day MA here, we've got a little bit of wiggle room to hold for a short-term pullback in anticipation of perhaps an intermediate-term trend bounce. But we'll cross that bridge when we get there. For now, we're looking at the short term. Now, another thing that we really like here is the weekly chart of Bitcoin. We often look at the longer term weekly charts to get an idea of the big picture trend, because sometimes the short term day-to-day gyrations of the daily chart can cause you to lose focus of the big picture. So this is a weekly chart. So each bar you see here is a full week of price action. And what we want to do here is scroll back actually to 2020. And we'll see that from the lows of 2020, the COVID lows, we basically have a trend line that's developed now that's been in place for 3 years, starting with that low and connecting with the lows here in beginning of the year, or actually late December. We can see that there's an uptrend line that is actually converging, almost converging with the 50-week moving average. And in our last video, our stock trading video, we talked about the importance of confluence and convergence. When you've got multiple support levels converging together, that support level becomes all the more significant. So we didn't quite touch that trend line with the dip below the 4-week low, but keep in mind that's also propping up the prices, that we've got this rising trend line along with the 50-week moving average just below the current week's low. So we are going to see some more resistance if we rally. You can notice that the 10 and 20-week moving averages are converging right around the 27,800, 27,900 area. Again, along with that 50-day moving average. So we've got a lot of overhead resistance, but we could see a little counter trend bounce here in the short to intermediate term after this 4-week of tight consolidation. So overall, with Bitcoin, we're cautiously bullish in the very short term, but we do realize that there's significant overhead resistance, and we need to be looking to take profits quickly if we get any kind of a rally attempt. As always, keep your stops in place just in case this breakout attempt does fail again. We have a stop just below the lows of this range. You could play a little bit tighter if you want. If it starts to stall, just get out, and you can get out with a scratch or close to it. Next up, let's take a look at Ethereum as a proxy for the overall altcoin market. And we see that right away that Ethereum has been showing relative weakness to Bitcoin, whereas Bitcoin just cut below its 4-week range lows and is back above its 10-day moving average. Ethereum is still below its 10 and 20-day moving averages. And notice that Ethereum also undercut its low, but the reversal did not take it back above its 10-day moving average. In fact, it stalled at the 10-day moving average. So Ethereum definitely has more technical resistance, more overhead supply. Got a lot of resistance here from everybody trapped between the 1600 to 1700 range. So the first thing we got to keep an eye on for Ethereum here is we got to get back above this 10-day moving average, which is basically yesterday's high around the 1620 area. And then we've got the descending 20-day moving average just above that at 1640. So got to be really careful in the altcoin market unless we see Ethereum get back above its 10 and 20-day moving averages. You can see here with recent rally attempts that Ethereum has not kept pace with Bitcoin in each of those rally attempts. In fact, it's been unable to get above the 20-day moving average and not even hold above the 10-day moving average for more than one day. So we'll be keeping a close eye on Ethereum to see if we start to see any more money flowing back into the altcoin market. But for now, Bitcoin is looking like a better potential trade setup than most of the altcoin market. We've been scanning hundreds of altcoin charts to look for new and emerging relative strength. There's not a lot out there right now. We're keeping an eye on a few patterns that have potential breaks of downtrend lines, such as INJ. INJ was a leader during the previous bull phase. Notice that it's basically been in a big range consolidating here over the past several months. And although it did sell off with Bitcoin and Ethereum below its 50-day moving average, notice that it's held up much better than Ethereum and Bitcoin. And now we've got a breakout above this downtrend line. And we can see here, INJ is just broken out above that downtrend line. And we also have moved above the 20-day moving average now for INJ. The big thing we like about INJ is notice that throughout the past several weeks of weakness, we didn't have any higher volume selling. We had higher volume up days and lower volume down days. And that's a big deal because when you don't have any higher volume selling, it means it doesn't take a lot of buying pressure for prices to move back up. The other thing we like here about our re-entry into INJ was that it coincided with an undercut. You can see we had a clearly defined level of support right around the 680 area, 1, 2, and 3 times, and then we broke down below that and formed a reversal candle, and now we're back above it. So we've absorbed all the supply here with this undercut back above the downtrend line. So if we get any kind of a strength in Ethereum or any type of follow through, INJ could show leadership. We're continuing to look for other potential trade setups in the altcoin market, but most altcoins out there, the charts are pretty damaged and they need to at least form some higher lows and reclaim their 50-day moving average. There's not a lot out there right now. But as always, we will keep members of Morpheus Crypto informed. We'll send you a trade alert with our exact entries and exits if we spot any other trade setups. But for now, the portfolio is just holding the Bitcoin and INJ. We hope you found today's video to be insightful. Keep an eye on those levels we talked about for Bitcoin and Ethereum, pivotal support and resistance levels that you want to be aware of. And if you're not yet a member of Morpheus Crypto, head on over to morpheustrading.com and drop your email to receive free daily crypto trade ideas and analysis. Have a great day, and remember to trade what you see, not what you think.